Today's topic is a true attention grabber, Occidental Petroleum, a stock that has been catching the eye of none other than Warren Buffett himself. But why has Oxy's stock price been range bound for 2 years? And what is the deal with the Buffett Buy Zone? We're here to talk about it, so let's get started. We have an intriguing topic on the table for today's video, Occidental Petroleum, a stock that's been grabbing the attention of none other than Warren Buffett himself. First and foremost here, why has Oxy's stock price been range bound for the past 2 years? And what exactly prompted Berkshire Hathaway to step in and make multiple purchases, especially at the 58.50 level, which seems to be the Buffett buy zone?
Well, what prompted him and Berkshire to start buying were the windfall profits in 2022. What's keeping him buying is improved cash flow, debt reduction, share repurchases, and the dividend outlook. His first buys were down in the 30s, I think. He's been buying in that 58.50 region, and that's because that's where he feels the value is. I think the stock has been range bound because the market knows that Buffett can buy up to 15% more of the shares, and they're ready to sell into the rally whenever he starts buying. The stock is up like 200%. What did I say? 200%, 300% since the lows. So that's a huge selling opportunity for people that bought in 2020. What do you think, Chris?
Yeah, well, it's funny when it comes to Occidental because I don't even have to look at the chart because I know where the price is because I'll see Don message you and say, "Hey, Thomas, it's in the Buffett buy zone." And then you write an article about it because it's in the buy zone. And you guys have been right all the time. I mean, every time. Yeah.
It's awesome though, because sometimes we call the buys before he makes them, and then like the day after when he buys. That's really cool.
Yeah, I mean, Warren Buffett's been taking his own advice. I mean, oil stocks the big oil stocks at least have traded kind of in unison with each other. Some a little bit better, some a little bit worse, but last year was a awful year for oil stocks in general, but Buffett kept buying because he's taking his own advice of buying when others were fearful. And he knows that the price of oil is going to go up because of the larger macro story. And let's not forget about the dividend, because from what I saw, it's been 4 quarters since Occidental last raised its dividend. That means that we're getting to that point pretty soon, probably this quarter, when there's going to be a dividend increase announced, and Buffett's not going to pass that up.
Probably this quarter. Yeah, right.
Yeah.
And just to elaborate on what you said, it's like Buffett bought an energy company and oil stock because of the oil outlook.
Yep.
He bought Oxy because of the capital structure outlook and the capital return outlook, which I think is far superior to just about any other energy company that I can think of.
Mm-hmm.
All right, guys. Well, maybe you've touched on this a little bit, but if Warren Buffett, an investing genius, obviously, keeps buying Oxy stock, there must be a compelling reason why. What could be driving the force behind his investments, and why should the average investor be taking note of this?
Yeah, well, Thomas just touched on the capital structure, and I'll let him get into more of that. But, Buffett is a legendary value investor, and there's only really one reason why he's buying into oil companies, and Oxy's not the only one that Berkshire Hathaway owns, and that's because he knows that the long-term outlook for oil prices is that they're going up, and possibly sooner than anyone expects. Oxy's an integrated oil company. That means it touches oil at every stage from drilling it to delivery. It's one of the top names in the sector. The world's going to continue to need oil for a long period of time. And Buffett has also spoken glowingly about Oxy's CEO, Nancy Hutlub, and the direction she's taking the company in. So that's a ringing endorsement as well.
Yeah, right. And just to touch on the capital structure, like we said, he bought energy because he knows that it makes money. He's buying Oxy because this company, when the other energy giants were leaning hard into dividend increases and boosting their share repurchase programs, it decided to improve its balance sheet and capital structure and pay down its debt.
Yeah.
Now, these value building efforts support an outlook for robust capital returns over time. And that's what Buffett's into. He's not trading this stock. He's buying value, cash flow, and profits.
Yep.
Okay, so Thomas, you had mentioned before how one of the key reasons for owning Oxy stock is the cash flow. Can you elaborate a little bit? How is Oxy generating healthy cash flow here, and what factors in the oil industry are the ones that are contributing to this?
Well, right now, the cash flow starts with oil prices. Oil prices are well off their highs, but they're still trading above the average for the 6 years going into 2021. So that's an elevated revenue base to start with. Cash flow is aided by production gains. OPEC is curbing production while the Western producers are ramping their productions, putting the world at record highs. So that's giving them production leverage. Add in efforts at efficiency, oil field investments, and technology, and you have today's Oxy. So all of these things they're doing with the balance sheet to improve their capital structure is also freeing up cash flow. So you've got this kind of dual, triple tailwind for the company generating its cash flow.
So what were exactly the highlights from Oxy's Q3 results? How did they impact the company's financial position, balance sheet, shareholder value?
Well, so revenue and earnings were down on the deleveraging of oil prices, but production volume exceeded guidance and offset those declines to a degree. So the real takeaway is that revenue fell 20%, but cash flow remains healthy and near record levels. The cash flow and free cash flow were also down, impacted to a degree by spending, but the YTD free cash flow allowed them to buy down 15% of their preferred stock, and reduce its net debt by 9%, and increase shareholder equity by 20%. Now that 20% increase in equity is a fantastic signal. That's one of the metrics that I'm sure Buffett's looking at. It's a real indicator that the company is taking its business seriously, reinvesting in itself, and positioning itself for future growth.
Berkshire Hathaway owns preferred stock in Occidental. So how might this influence Oxy's future actions regarding debt repayment and share buybacks?
Yeah, so most investors know that about in 2019, Berkshire bought about $10 billion of preferred shares from, preferred shares of Oxy. And, I think the company is going to continue to do more of the same of what Thomas just said. They're going to continue to pay down debt. They're going to continue to, increase the shareholder equity. That's just going to simply make the stock more attractive for Buffett to buy. And as Thomas said, it already owns, I think, 28% of the company. That is undoubtedly going to go higher. And I think I saw that those preferred shares currently, the dividend on those is about 8%. So, Berkshire's not going to be interested in getting rid of those shares anytime soon. Yeah.
All right, so Oxy is expected to report Q4 results soon. What are the analysts anticipating for this quarter, and what factors might lead into potential underestimations in demand and operational quality?
Well, so the outlook is a little mixed, with revenue declines expected to persist into Q4, but growth in revenue and earnings should resume again in this fiscal year. So within that, operational quality, both in the oil field and in the cash flow statement, should generate cash flow improvements, help sustain the capital return outlook, the debt reductions, the repurchases, and even improve the shareholder returns over time. So as Chris was mentioning before, we're expecting a dividend increase now, basically. If they don't do one, that'll be a warning sign. But what I'm expecting is for it to be sizable. I mean, it's not going to be like 20%, but it might be a solid 10%. And that'll be a driver for the stock. Oh, regarding demand, I think that the demand issue was more fear-based than reality at this point. There's a lot of fear that high rates are going to curb demand, but there's not really a lot of signs in the data, either labor or consumer spending, that demand is weakening. Right now, we've got wicked cold across most of the country, war in the Mideast, and both of those are good for oil prices. So I'd expect to see demand holding steady, oil prices going up, and Occidental doing better.
Yeah, I just read something this afternoon that talked about how I think half of North Dakota's production of oil is being shut in because of the cold weather. And that's affecting, oil delivery throughout the United States, all the way down, I think, to Texas, they were saying. So,
Right. This
All right,
is
well, looking ahead to the rest of this year, what growth prospects does Occidental Petroleum hold? Are there any specific factors that could lead to significant outperformance of current estimates?
well, so Thomas touched on the geopolitical risks. Investors should pay close attention to what's going on in the Middle East, because any escalation of the conflict there is going to be directly, it's going to hit oil prices directly. And that means that they're going to go up. I also noticed that Occidental CEO, she was speaking at the World Monetary Forum in the World Economic Forum, excuse me, in Davos. And she was saying that starting in 2025, as long as things continue at their current trend, there's going to be a supply shortage for oil starting in 2025 that's going to last for the foreseeable future, because oil companies simply have not invested enough money in new places to drill, and there's just going to be a demand that's going to far exceed the ability of the oil companies to supply that. And then one last thing I'll bring up is that, you know, this is 2024, it's an election year. I don't know what direction interest rates are going any more than the next analyst. If I had to bet, though, I would say that it's probably likely that we're going to see some easing of interest rates at least sometime in the summer. And I'll just leave it there.
Yeah, for me, what I see is Occidental is ramping production, outperforming its own targets. So I would expect that to continue. If there's any revenue or earnings weakness, that's going to be price related. Right now, I think me and Chris are pretty much in alignment that there's a floor in oil near where we are now, and that the outlook is for it to go higher. So I would expect that if that were to be the case, that Occidental will significantly outperform this year, and the support of the analysts, who may drive the stock higher.
Okay, let's quickly talk about the price action of this stock. What are the key resistant levels that we need to watch out for in the near future?
Well, the stock is definitely range bound right now, but the floor looks pretty solid at the 56 level. That's where it's trading now. It's bounced pretty solidly from there a few times over the last 2 years. With it at this price, I would definitely expect to see Buffett buying some more soon. So look for news over the next few days. I think the top of the range is near $65 right now. I think that it could be tested again by mid-year. If the economy survives the winter without recession and the FOMC cuts rates, I think that Oxy could be at fresh highs by the end of the year. Oil prices too.
All right, well, as always, we're going to keep a close watch on this stock. With Warren Buffett's backing, healthy cash flow, and the potential growth prospects, Oxy is in the spotlight for all of the right reasons. Thank you for joining us today at Market Beat. Stay tuned for more insights in our future videos. Thanks, guys.